Hello and welcome to your business news. From the bustling floors of the Nigerian exchange to the high-stake corridor of energy policy, this is your weekly business wrap-up. I am Hadiza Galadima and these are the stories shaping the economy this week. We begin with a massive leap for the decade of gas. The Dangote Group and the NNPC subsidiaries have sealed a series of strategic gas sales and purchase agreements. This deal guarantees a steady supply to the Dangote refinery, fertilizer and cement plant, aligning with the group's Vision 2030. However, it's not all smooth sailing in the oil patch. Nigeria export volumes are set to take a hit as the Bonga FPSO undergoes critical maintenance. Shell confirms that roughly 225,000 barrels per day will be offline until March to ensure the facility's integrity for the next 15 years. Meanwhile, a moment of openness from the top, NNPC GCEO Bayo Ojulari conceded this week that the national oil company cannot run its traditional refineries profitably under the current structure, citing the need for a shift towards private sector-led operational excellence. And in markets and microeconomics, in the equity market, it is a green week for the savvy investors as analysts have named Wemo Bank, Mutual Benefit Assurance and Presco PLC as the top stock picks, citing strong fundamentals and dividend prospects. And in a staggering revelation of the invisible economy, a new report shows that uninsured fire disasters have wiped out a colossal 4.6 trillion naira from Nigeria's informal sector over the last 3 years. And on the currency front, the naira defied logic this week, hitting a record high of 1,372.91 naira against the dollar in the parallel markets, even with a significant CBN flow as market forces react to tightening liquidity. Nigerians are tightening their belt. New data for Shop Point Reward shows a 28% decline in restaurants and fast food visits. Households are officially pivoting back to home cooking to dodge the high cost of dining out. This shift comes as farmers scales back food production, citing mounting losses from last season and a high input cost. Many are planting less, raising red flags for national food security in the coming months. And in corporate earnings and innovation, corporate giants are reporting mixed fortune as Owando PLC has grown its net profit to 241.3 billion naira, fueled by a massive tax credit and production optimism. While Arade Holdings delivered record earnings of 401.2 billion naira, riding high on a strategic acquisition of an additional stake in ND Western. And globally, Toyota has hiked its profit forecast to 3.57 trillion yen, proving resilience even as it navigates the impact of new U.S. tariffs. Onto policy and global relations, the federal government is moving to lighten its load, announcing plans to share electricity subsidy costs with state governments starting this year. This moved the burden of cheap power from the center of federating units. And in a move to polish Nigeria's image abroad, report reveals that a top associate of Tom Polo has hired a U.S. lobbyist for $720,000 to strengthen bilateral relations and counter negative narratives in Washington. Finally, FRS Chairman Zach Adedeji delivered a blunt warning stating raw materials export won't save Nigeria. He insists that unless the country transitions to a knowledge and complexity economy, sustainable growth will remain a pipe dream. That's it on this week's business recap. Don't forget to follow all our social media handles for more updates in the business world. Stay prudent, stay informed. I am Hadiza Galadima.